Today, South Korea reportedly looks to freeze Do Kwon's passport as the hunt for the Terra founder continues. A new court filing shows some of Celsius's top executives sold millions of dollars in crypto ahead of the company's bankruptcy. And Jurrien Timmer of Fidelity explains why Bitcoin's rate of adoption is the most important thing for the asset going forward. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies were mixed this morning. By noon Eastern, Bitcoin traded above $20,000, Ether was worth about $1,300, and the meme token Dogecoin dipped to 6 cents. Okay, let's talk about the top stories. First, Terraform Labs CEO Do Kwon is set to lose his South Korean passport. Bloomberg is reporting that a government notice posted yesterday said Kwon has been ordered to return the document or else it'll be revoked in about 2 weeks. Last month, Interpol reportedly issued a red notice for Do Kwon as South Korean officials claim he's on the run, though he has repeatedly denied that he's in hiding. We told you yesterday that South Korean officials froze millions in crypto belonging to Kwon. According to News One Korea, prosecutors froze a portion of the $62 million in Bitcoin that officials claim belonged to him. And last week, they requested crypto exchanges KuCoin and OKX freeze his assets. In response to the report, Kwon tweeted yesterday that he didn't understand the falsehood and that he doesn't know whose funds they've frozen. Next, top executives at Celsius, including former CEO Alex Mashinsky, withdrew tens of millions worth of crypto just days after the collapse of Terra and a month before the bankrupt crypto lender suspended customer withdrawal. CoinDesk first reported that the executives took out more than $42 million in crypto between May and June of this year, which was disclosed in court records submitted by Celsius lawyers on Wednesday. The documents show that the company's former CEO Alex Mashinsky, its co-founder, and chief technology officer were involved. The transactions came in the form of Bitcoin, Ether, and the lender's own Cell token, just to name a few. Celsius suspended customer withdrawals back in June and filed for bankruptcy protection the next month following risky bets and as digital assets tanked. We reached out to Celsius and the lawyers who filed the paperwork, but as of noon Eastern, we hadn't heard back. Finally, the European Union confirmed it is tightening sanctions and banning crypto services to Russians as the war in Ukraine rages on. According to a news release, the bloc introduced the 8th package of sanctions in response to Russia's, quote, continued escalation and illegal war against Ukraine. The new package tightens a previous rule that limited crypto payments to European wallets to 10,000 euros. In a statement, the European Commission said today that, quote, the existing prohibitions on crypto assets have been tightened by banning all crypto asset wallets, accounts, or custody services, irrespective of the amount of the wallet. All right, on to our main story. I spoke to Jurrien Timmer of Fidelity to get his take on the crypto markets, and he shared his strategy for valuing Bitcoin and other cryptocurrencies. Let's take a listen. All right, Jurrien, thank you so much for joining us for this interview today. Let's jump right into it. A pretty bad year for risk assets broadly. Let's talk about crypto, though. What are you thinking about Bitcoin these days?
You know, it's in a holding pattern, right? It's around 20,000. It hasn't really moved for quite a while. Even the network growth is kind of stalling a little bit at about, I think it's about 48 million or so addresses with a value greater than zero. And I think Bitcoin is just waiting around for the macro narrative to improve, I think. I mean, it doesn't necessarily need the macro narrative because Bitcoin is doing its own thing. Its network is growing, and ultimately the value comes from the size of the network, right? We see that in technology all over, and certainly crypto and Bitcoin are no different from that. But the macro narrative can speed up or slow down the adoption curve, right? And so we saw a couple of years ago that obviously the macro environment of money printing and all that stuff was very favorable to Bitcoin, and we saw it do a rocket from 3,000 or so in March of 2022 to almost 70,000. It's now down around 20,000. The macro, of course, could not possibly be any worse. And that's been the case, of course, for stocks and bonds and commodities and markets in general. But Bitcoin as the ultimate long duration asset is one way that I've heard it be described, certainly is not immune to that. And that's why Bitcoin is just sort of languishing, I think, until the macro starts to improve.
Is there anything in particular you're looking at for that decoupling with stocks?
I think the glass half full interpretation is that the S&P actually undercut its June lows, and Bitcoin did not. So yes, it's frustrating that Bitcoin is still sitting around 20,000, but it's actually, I guess you can say, it's putting in a bullish divergence against the equity markets, which of course are risk assets, and Bitcoin has been correlated to that. So I think that that's a good sign that Bitcoin is not making lower lows along with the rest of the markets. Bonds went to new highs. The 10-year went to 4%. It's a little bit lower now at around 380 or so. So that's maybe a sign that the crypto winter is pretty mature, and that whatever deleveraging needed to take place has taken place. And again, as I mentioned earlier, even though the network growth, the curve's growth rate is not as robust as it was, let's say, 6 or 12 months ago, it is still growing. And so that is a sign that Bitcoin's own particular fundamentals are continuing to play out, and that's a good sign. But in terms of, when do we see the light at the end of the tunnel? And hopefully it's not, a freight train, is, related to, of course, the Fed and where this cycle is going to end. Markets are always focused on a rate of change. And so if the rate of change of Fed tightening starts to slow, that is essentially the same as a Fed easing, because then all of a sudden markets will breathe some relief. But we're not there yet. We've had a few Fed speeches kind of indicating maybe it's 4 to 4.5 instead of 4.5 to 5. But at the same time, I think the Fed wants to stay pretty hawkish here, because if it lets the markets off the hooks too soon, then markets will rally, financial conditions will start to ease, and that kind of undermines the very thing that the Fed is trying to do, which is to really break inflation's back. So I don't think we're going to get a lot of relief on that, but it does come down to the Fed. And of course, we've seen this Fed policy play out in the bond markets, in the stock markets, but also in the currency markets. And I think that's, I think, where the pressure points are right now globally. And we've seen the stories, from the Bank of Japan intervening in its currency, the People's Bank of China. Of course, we saw all the drama with the Bank of England just recently. So maybe that will be the thing that forces the Fed's hand, but so far it hasn't.
When we're talking about how investors should be valuing Bitcoin, what are some of those fundamentals that you look at? What are some of those on-chain metrics? How do you measure, the growth of the network? What are you looking at?
For Bitcoin, I use what I call the price to network ratio. So I look at the network of non-zero addresses, for instance, and it's not a perfect measure, but it's a pretty good measure. You can do the same for Ethereum, of course. And then you just divide the price to, what I do is I divide price by millions of addresses. And for Bitcoin, that price to network ratio is 25. And that actually is pretty low compared to past cycles. It actually is the lowest since 2014, right after that peak happened back then. So you look at price, 20,000 versus, the peak at 70,000. That obviously is a large discount to where it was priced. But in valuation terms, it's actually even lower because the network continues to grow. So a price, that goes down while the network goes up means actually that valuations are really pretty low by historical standards. So that's how I measure valuation. And then, of course, the inputs in that valuation are the price, of course, which is driven a lot by sentiment and deleveraging, and the macro, of course, that we talked about. But it's also driven by the actual growth in the adoption curve. And I think that for Bitcoin is really the most important thing going forward. And I've done some historical work. I've looked at historical S-curves or adoption curves of various technologies. They all follow this same exponential growth curve, which we call an S-curve or an adoption curve. You see the same thing, for instance, Apple Computer with iPhones. And so the slope of that curve, I think, really is what's going to drive the valuation. And of course, the macro can either speed up adoption because the macro narrative kind of gets people's attention and they want to get that store of value, aspirational aspect of Bitcoin, or it could slow down the adoption curve. And that's, I think, what we're seeing this year.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.